What is up, everybody? In tonight's video, we're going to do a trade recap. We're going to be looking at the Aussie dollar. We're going to be looking at Euro USD as well as ticker symbol OBLN. We're going to discuss those three trades in depth, so stay tuned. What is up, traders? My name is Heath, and this is Trade Talk. So if you can remember in last night's video, I was talking about the dollar putting in an evening star reversal pattern. Obviously, we don't know if those patterns are going to work out. That's why there's risk in trading. But this morning when I woke up and I was looking at everything I usually look at, I noticed that the Aussie currency was the strongest currency in the market this morning. So I didn't really want to short the Aussie because it was very strong. And I also seen that the dollar was moving up too. So let's go over this pair real quick so I can show you what's happening. We are looking at the Aussie dollar. All right, so as you can see here, the Aussie dollar is in an obvious uptrend. I mean, this trend line is beautiful. So, and we never even broke below this market structure on a closing basis. So as you can see, we tested the 21 exponential moving average on a daily closing basis at this yellow line right here. So let me scroll out for just a little bit. So right here, this was today. So this was yesterday. So the day before that, we were weak, but we could not close the daily candle below that 21 exponential moving average. Now, I don't take trades based on exponential moving averages per se. However, I will look at where they are in relationship to current price. You stack that together with the fact that there's this ascending trend line that hasn't been breached yet on a daily closing basis, and the fact that the Aussie was the strongest currency this morning before the New York session. I wasn't looking to take a short on it anymore. Everything changed overnight, and that's the way trading works. You have to be able to change your bias at the drop of a hat, so to speak. All right, so since the EMA is caressing price, I went down to a 4-hour. And this morning, when the New York session opened, we were basically making this candle here. All right. And we were coming down to test this grouping of moving averages. All right. But that's not really what I was more concerned about. What I was more concerned about is this level at 0.77165. I was looking at that as a very strong level. Yes, we had this sell off, but we have made higher highs and higher lows since. We breached right back above those moving averages and made a higher high. So on the New York test, we came down and tested. Now, we did not test this line all the way, but the fact that those moving averages are there and the fact that the dollar was moving up, but so was the S&P 500. And this is the whole reason right here. The S&P 500 was making higher highs, all-time highs, as well as the dollar was climbing. Right now, since March anyways, we'll say since March, the dollar has basically been, if the dollar is moving up, then the S&P 500 is usually moving down. Now, the presidential inauguration was today, but I don't really care about news. Essentially, I'm looking at price and what the context is of that price for that session, so to speak. So I realized that with the S&P 500 making all-time highs, with the dollar moving up, with the Aussie moving down, I decided to take a long position on the Aussie dollar. All right, so let's go down here into a 5-minute chart so I can show you what happened. All right, so essentially, I was watching this area here. All right, this last closing 5-minute candle right here. Let me get this moved up in the middle of the chart so we can focus. All right, so we had a strong push out of that area, and then you can see that we held that area as obvious support. I mean, look at that. Yeah, you're getting wicks through it, but you're closing every candle at or above that line. This is crucial in figuring out where price is actually making a support or resistance. We can't tell where price is going to make support and resistance. We have to let price tell us where it's making support and resistance, if that makes any sense to you. All right, so as this was happening on this push down, once we started to retreat, I got long on this candle. All right, now my stop loss was below this low of this 5-minute candle, but it was down lower. All right, bear with me as I pull up that position. All right, so here is the actual trade that I took. Now, realize that my stop loss is right here, but initially when I took the trade, that my stop loss is so close to the low of this candle. Had my stop loss been there when this price moved down, I would have gotten stopped out based on the spread alone. The spread was 1.3 pips. And I don't know if that's exactly, I could just tell by looking at it that I would have gotten stopped out on that. So my stop loss was about 5 or 6 pips below this low here. So once we came down, made this test, and it was lower, the close was lower than this candle here. All right, let's go over here and look at it. Well, my entry level was 0.77251. All right, and we can't really go by the stop loss because I moved it too quick, but that's all right. We'll go into the chart and I'll show you what happened. So here is this push down, and we did close there. But remember, my stop was just probably around 77192. We'll just call it that because I don't know for sure where it was. But I moved it up once this happened. Once this big strong push happened, we took out all of this. Even I was getting ready to exit this position, but this candle closed back above my market structure level that I'm looking at. All right, which was this area here at 0.77238. We closed above that, so I moved my stop up to right below the low of this candle, and we started pushing higher. Now, obviously, if I go into the dollar, I will show you what the dollar was doing during that time. The dollar was in this area here. And this trend line, if you watched yesterday's video, you know exactly what that trend line is. It is this trend line right here. Let's go to a 4-hour chart real quick just to show you that this trend line was holding, all right? So we were kind of pushing up into that area, which made it a little bit on the more nerve-wracking side, I guess you could say. Made it a bit, it wasn't as simple as just, I know this is going to happen. All right, so then right here we were. During that, the dollar is pushing up into that trend line. I'm looking at it as the dollar is more or less probably going to push up to that trend line, possibly short everybody out and then head lower, because at this point in time, the S&P 500 is still strong as a bull, still pushing up strong. So I'm looking for the dollar to turn around, and it was happening while all this was going on. So on this big push down, I did get a little bit nervous thinking that I was on the wrong side of the trade. But as soon as we closed this 5-minute candle over the opening price of this 5-minute candle, I knew I was okay. So once we come up into here, I took the entire position off. It was roughly a 5-to-1. So it was a 5%-ish trade. It wasn't exactly 5%. It was like 5.1%. All right. So I took that trade off, and as soon as that happened, I went into the Euro USD chart, okay, and looked at this, and this is the same descending trend line as the dollar has an ascending trend line. Now, the dollar shot right through its trend line. As you can see here, it created this sentiment for short sellers. All right, it made every short seller think, yeah, it's a test of this trend line. We're going lower. Woohoo! Yep, that's what happened, but no, boom. This was a stop run. Now, this is when the trades become a little less more probable, because we don't know what is transpiring on this. Once we take out the liquidity that resides above this high, we have no clue if the sellers are going to sell to those higher buyers, or if the price is going to continue higher because more people are buying than there is, or the buyers are more aggressive than the sellers. But it reversed straight out of there. Once that happened, I took an entry long on the Euro USD as a swing trade. And the reason is because I am assuming that this was a stop run only. And I am assuming that dollar sellers were selling to those higher buyers, because why not? And also, if you put that into context with the fact that yesterday we closed an absolute textbook evening star candle formation on the dollar, kind of felt like the dollar was going to be going lower today. Once this happened, I got long right here. My entry is exactly at 1.20864 indicated by this green line, and my stop is still currently sitting at 1.20756 below this red line. All right. If price trades up out of this area tonight, I will move my stop up to at least break even to see if this wants to continue higher. So that is good. All right, so essentially this is the same. These are the same technical tools I use on my Thinkorswim platform. The Thinkorswim platform is the platform that I use to enter and exit trades for the stock market as well as options. Basically, what the light blue thin line is the VWAP, and the bright green thick line is the 9 EMA, the 9 exponential moving averages. Essentially, what I was looking at is when we opened, this was already like 80% up on the day, and it went up, made a high. I do not trade right off the open. I wait for price to form something that I can identify as support or resistance if I'm looking to go short. We had held support here. The VWAP and 9 EMA was trading above price, but on this breakout here on the 3-minute candles, I use 3-minute candles when I'm trading the stocks. I took my entry. My entry was at 306. That's where I got filled on the bulk of my position. Once that happened, I essentially just wrote it out. When did I exit the trade? I exited the trade on this candle right here. All right. Once we had a closure below and then a second closure below, well, it was this candle that I exited the trade on. But when we had this second close on this little push up, I exited the trade. I got filled at 576 for my exit. So essentially $2.50 on the trade. It was a fantastic trade. I have to say that this does not always happen, guys, but this is what I look for on these slow float small cap penny stocks. This is a very, very, very risky style of trading. Obviously, I don't have to tell you that, being low float, low cap stocks, but this was an awesome setup. It worked out beautifully, and I can't be more happy. So I hope I don't use, when I trade these things, I don't trade these the same way that I trade Forex. When I'm trading these, I'm just basically chasing momentum. I mean, as bad as it sounds to say that, that's how everybody that trades low float, low cap penny stocks do. They are chasing momentum. They're buying 1-minute highs or 5-minute highs. They're breakout traders. This was not quite a breakout, but once we cleared those averages, I got in the trade, and I had my stop setting right at the low of this bearish candle here. So I had about a 30-cent stop on the trade. All right. So $2.50 on a 30-cent stop. That's a nice risk to reward. All right, so that's all I got for you guys tonight. Make sure you hit the thumbs up. Make sure you subscribe. Drop a comment down in the comment section. Tell me if you want me to look at a stock or a cryptocurrency or a Forex pair. Drop it down in the comment section below, and I promise you the next video I do, I will take a look at that for you, and make sure you give me a time frame, all right? So guys, happy trading.